that. Breaking news from the Bank of Canada. It has cut its key interest rate by 25 basis points, bringing it down to 2.25%. The bank's governor, Tiff Macklem, has just been speaking about the decision to reporters in Ottawa.
This was our second straight cut and reflects ongoing weakness in the economy and contained inflationary pressures. The weakness we're seeing in the Canadian economy is more than a cyclical downturn.
Is that what they're going to say?
It's also a structural adjustment. The U.S. trade conflict has diminished Canada's economic prospects. The structural damage caused by tariffs is reducing the productive capacity of the economy, and it's adding costs.
Can't help himself.
And the CBC's Nisha Patel was watching that.
Canada's problems, didn't you know, are all because of America. It's got nothing to do with our own governance and our own government. It's got nothing to do with our own decisions, our own trade policies. It's got nothing to do with any of that. Canada's problems are all because of America. That's what they're saying.
And the CBC's Nisha Patel was watching that news conference. She joins me now. Okay, so Nisha, despite inflation being over the 2% target, we heard this news of a rate cut, and we heard more details too from the Bank of Canada's governor. What stood out to you?
Yeah, the Bank of Canada seems less concerned about inflation at this point, Arthi. Even though it's at 2.4% above target, the central bank seems to think it will cool throughout the rest of the year. And the clear priority right now is the economy, which of course is being hammered by the trade war with the U.S. GDP shrank in the second quarter, likely to stay weak throughout the end of the year, may pick up a little bit next year, but we are seeing job losses, investments being...
And this is why we have a liberal government, because liberals are the greatest at fear-mongering in Canada. Conservatives are all about being objective, truthful, for the most part, when you compare it to liberals, at least, okay? Honest, not like the people conservatives, I just mean the politicians and policies and stuff like that. Liberals are the best at fear-mongering, and Canada's nationalistic pride, it's not like America, okay? America, they wave the American flag, and they're like, yeehaw, proud to be American, get them. We don't have that in Canada. We say, oh, it's about time we're not American. Like, Canada's nationalistic pride is not proud to be a Canadian. It's proud to not be American. And when you have that as the epicenter of so much emotions and the reason why people vote the way they do and affect policy and affect legislation, then it's easy to manipulate the masses. This right now is very easy for the liberal media and the liberal government to push this fear-mongering onto Canadians, because you know what? Maybe you don't fall for it. I certainly think that I don't fall for it. I think I'm immune to this anti-American rhetoric, but more than half of the country somehow falls for it. And it's gross. It's disgusting. Because Americans and America is our friends and our neighbors. And yeah, sure, we're fighting right now, and it's not very good. Like, I'm not saying America is being the best trading partner right now. Okay, we're button heads. It takes two to tango. I can say that. But Canada is so rude and mean and disgusting when it comes to relationships with America. And right now, the Bank of Canada governor, we're cutting interest rates, not because of our economy. Our economy's fine, says these guys, right? Never mind the massive inflationary costs from COVID, where price of blueberries were like $3 in 2019, and now they're like $12. Don't quote me on that, but you get what I'm trying to say. Now, our economy's fine, according to these people. It's America that we have to worry about. That's why we have to cut rates, because of America. It's bizarre.
Frozen across certain sectors, including steel, autos, the forestry sector. And so this rate cut really is to kind of kickstart the economy a little bit. Lower interest rates make borrowing money cheaper. And so anyone with a variable rate mortgage or a line of credit gives them a little bit more room, a little bit more confidence to spend, and they spend that money throughout the economy. It is not great for savers, though, if you have a high interest savings account and you've been loving those really high returns on that, that will get a little bit lower as well. So a little less return on that as rates go down, but it looks like that's where we're at, 2.25%.
And we've seen sort of an evolution of attitude perhaps from the Bank of Canada governor over the course of the year as this country and the economy continues to deal with.
It's important to note, okay, and this isn't my opinion. This is a fact that has been said by the Liberal government, by the Bank of Canada governor, and by banks. Just because interest rates are coming down, just because the Bank of Canada rate is now 2.25%, that's prime, plus one is usually the best deal you can get for a mortgage. So in theory, if you have good credit and decent income, then you should be able to qualify for 3.25% mortgage. However, that's not how that works. You don't just get prime, which is 2.25%, plus one, which would bring it to 3.25%. If the banks, RBC, CIBC, TD, Nova Scotia Bank, you're richer than you think, Bank of Montreal, if all the banks, if they don't follow the Bank of Canada decision, and it's entirely up to them on whether or not they want to follow the Bank of Canada's decision, then rates are staying at what the banks decide. It won't go lower than 1% above prime, which is currently 2.25%. So you're not going to get a 3% mortgage today. The best you could get is 3.25, but that's only if the banks follow suit. And we saw like 6 months ago when they started to really bring down the rates, the banks didn't follow. The banks stayed at 5%, 5.5%. They're like, we're just going to wait and see. We're just going to wait and see, right? And so in theory, if you're looking at this as like, hey, yeah, more borrowing power, well, not for you, though. Not necessarily for you. For the banks, for the big dogs, for the elites, but not for you. And it's weird. It's weird because the banks get to choose independently, if I'm not mistaken, whether they want to follow the Bank of Canada's decision to bring down rates.
Trade. We're expecting one more announcement in December. How do we think things are going to pan out to that point?
Well, the central bank governor really giving a clear signal today that it seems like interest rate cuts are done for now. The signal from the central bank saying that if the inflation and the economy continue down the path that they projected, that this is the right level for interest rates. So likely no more cuts this year unless something crazy happens with the economy and they are prepared to respond for that. We are also going to hear from the U.S. Federal Reserve today. They are also likely to cut interest rates. But really, the other interesting thing from the central bank, Arthi, talking about how there's this real structural shift for the Canadian economy, that this trade war has caused a big change in how we do business with our biggest trading partner, the United States. And this is something that businesses are really going to have to strategize and live with as probably a long-term future.
Okay, thank you for this, Nisha. That is the CBC's Nisha Patel.
Yeah. So again, I mean, interest rates coming down. Is this good? Is this bad? I'm going to pass the question off to you and let you guys decide. Do you think that this is good? Do you think that
the
this
policy?
Man, I freaking open up the next clip and it starts playing. Do you think this is good or do you think this is bad? Let me know down below in the comments. Now we're actually going to take a look at Tiff Macklem, who takes questions from reporters on this.
We have the policy rate only at the lower end of kind of the neutral range. It's not in deeply stimulative territory, and yet your projection for the economic outlook is pretty bad. It's pretty weak. And you talk about the kind of constraints on monetary policy in stimulating the economy when we're going through this kind of structural shift. Can you unpack that a little bit? Why are we not talking about more stimulus from the Bank of Canada when we are talking about a very weak economic outlook and one that, there's going to be permanent scarring from the U.S. trade policy?
Well, first point, Mark, is we're now at the lower end of our range of neutral. So monetary policy is providing some stimulus. But as I tried to outline in my opening remarks, the role of monetary policy in the current situation is somewhat limited. What we're going through is not just a cyclical downturn. And what do I mean by cyclical? Cyclical means, you go down and you come back up. You go back to your previous trend path. It's not just a cyclical downturn. Part of it is a cyclical downturn. I mean, demand for our products, particularly in the United States, is lower. And there's a cyclical element to that. But part of it is structural. The U.S. has swerved to protectionism. It's harder to do business with the United States. That has destroyed some of the capacity in this country. It's also adding costs. Businesses are looking for new markets. They're reconfiguring their supply chains. That adds costs. So, the fact that this is partly structural and the fact that it's adding costs limits the ability of, or limits the role of monetary policy in boosting demand while keeping inflation low. So, I mean, just to sort of unpack that a little bit more for you, what can monetary policy do? Well, first of all, monetary policy, let me start with what it can't do. I mean, monetary policy can't target specific sectors. It can't target the hard-hit sectors, aluminum, steel, autos. It can't help companies find new markets. It can't help companies reconfigure their supply chains. What it can do is it can try to mitigate the spillovers from the hard-hit sectors to the rest of the economy, and it can try and help the economy adjust to this structural change. But its role is limited because, as I said, this is more than a cyclical downturn. It's a structural change. There are added costs that limits how much we can boost demand and keep inflation well controlled.
Which is interesting because they said inflation is not the problem here, right? This is where it's all very confusing. They say one thing and then do another. They're saying we got to keep inflation under control, but also we're cutting rates not because of inflation. We're cutting rates because of America. That's literally why Tiff Macklem is doing this, because Canada's sectors, the tariffs from America and the lack of a trading deal and the slow collapse of our economy is really bad. And so they're trying to increase borrowing power to keep the cycle of debt continuously going. And this is all, I get this, days before the budget gets announced, right? November 4th is when I think the budget gets announced.